Everyone loves a good underdog story. The idea that you could turn a few $100s into thousands, maybe even millions, by finding the next big stock before everyone else. That's the dream that draws people to penny stocks. Tiny companies, small prices, massive potential. At least that's what the advertisements say. But here's the truth: in 2025, penny stocks are still one of the most dangerous places you can put your money. And yet they are more popular than ever. So today, let's pull back the curtain and reveal the truth about penny stocks in 2025, what they really are, why people are obsessed with them, how manipulation works behind the scenes, and most importantly, how to protect yourself from getting burned. Let's get started. First, let's define what we're talking about. A penny stock is generally any stock that trades for under $5 per share, often from a small or micro-cap company. They're not listed on big exchanges like the New York Stock Exchange or NASDAQ. Most trade on the over-the-counter markets or pink sheets. These companies are often startups or struggling businesses trying to raise capital with little or no proven track record. They might have exciting stories, revolutionary tech, breakthrough medicine, next-generation energy. But behind the flashy claims, most of them have minimal revenue, weak management, and almost no financial transparency. That's the first big truth. Penny stocks are cheap for a reason. If a stock is trading at 25 cents, it's not because Wall Street hasn't discovered it yet. It's because the market already knows the company hasn't earned the right to be valued higher. It is like buying a lottery ticket disguised as an investment. Now, that doesn't mean every penny stock is a scam. Some do grow into real companies. Even Amazon, once upon a time, traded for under $5. But those success stories are extremely rare, and the odds are stacked against you. So why do so many people still fall for the penny stock dream? Simple: greed and hope. In a world where most blue-chip stocks move 5 to 10% a year, penny stocks promise 500% in a week. They play on emotion, the fantasy of what if. What if this company is the next Tesla, the next Nvidia, the next biotech explosion? What if I get in early and never have to work again? That's exactly what promoters want you to think. Behind every hot penny stock tip is usually a coordinated campaign, a pump and dump. It starts when insiders or promoters buy large amounts of a tiny stock. Then they create hype through emails, social media, paid newsletters, or even fake news articles. You start seeing comments like, "This stock is set to explode," or "Analysts predict 1,000% gains." Then comes the flood of retail investors, average people chasing the hype. As more people buy in, the price skyrockets, sometimes doubling or tripling in days. That's the pump. But here's the dark side. The insiders who started the hype begin selling quietly at the top. Once they are done, there is no more buying pressure. The price collapses back down, leaving late investors holding worthless shares. That's the dump. And this cycle repeats again and again every year. The names change, but the playbook never does. Now in 2025, the game has evolved. Thanks to social media and AI-powered trading bots, penny stock manipulation has reached new levels of sophistication. Scammers use deepfake videos, AI-generated news headlines, and fake analyst posts to build credibility. They even create fake press releases using ChatGPT-style language to make their companies look legitimate. That's why it's harder than ever to tell what's real and what's not. A company might look polished, professional, and promising, but dig deeper, and you will find it has zero revenue, no real operations, and a CEO who has been involved in multiple failed ventures. So how can you protect yourself? The first step is due diligence, real research. If you are thinking about buying a penny stock, ask yourself, can you read their financial statements? Are they filing reports with the SEC? Do they have real products, real customers, or real earnings? If the answer is no or I don't know, that's your red flag. Also, pay attention to volume. Many penny stocks trade at just a few thousand shares a day. That means even small trades can move the price dramatically. It also means you might not be able to sell when you want to. There's simply no one buying. That's called low liquidity, and it's a silent killer for small investors. Here's another truth. Most people don't realize that penny stocks don't follow logic. They don't move based on earnings, growth, or fundamentals. They move based on hype and human emotion. And emotion-driven markets can crash faster than you can click sell. Let's talk about how most people lose money. A beginner might see a stock jump from 10 cents to 30 cents overnight. They buy in, thinking they are catching momentum. But by the next morning, it's back down to 8 cents. They panic, sell at a loss, and swear off investing forever. The few who make money are usually the ones running the show, the insiders, promoters, or early traders who got in before the hype. Here's the harsh reality. 90% of penny stock investors lose money. Only a small fraction ever makes consistent profits. And those who do treat it like a business, not a get-rich-quick scheme. Now, let's balance the argument. There are legitimate opportunities in the small cap world. Sometimes a tiny company really is onto something big, maybe a breakthrough in biotech, clean energy, or software. But identifying those gems takes serious research, patience, and risk management. That means understanding financials, knowing the market, and being ready to lose what you invest. Because with penny stocks, the risk of going to zero is always real. One of the biggest myths is that penny stocks are a shortcut to wealth. They're not. They're a shortcut to experience, often painful experience. If your goal is long-term wealth, the truth is boring but effective. Consistent investing in solid companies, index funds, or ETFs. Compounding works slowly, but it always works. But let's say you still want to try penny stocks. You can, but do it smartly. Rule number 1, never invest money you can't afford to lose. Treat penny stocks like a casino, entertainment, not a retirement plan. Rule number 2, avoid the hype. If everyone is talking about it, you are probably too late. Rule number 3, take profits quickly. If you're lucky enough to be up 100%, take it. Don't wait for 1,000%. Because in the world of penny stocks, greed always eats the gains. And rule number 4, diversify. If you invest in small cap or micro cap stocks, spread your risk. One big win can make up for several small losses, but only if you survive long enough. Now let's look ahead. In 2025, regulators are cracking down harder than ever. The SEC has launched new AI tools to detect suspicious trading patterns and social media manipulation. More scams are being exposed, but new ones pop up every month. The truth is, as long as there are dreamers looking for the next big thing, there will always be someone trying to sell that dream. Penny stocks are the wild west of investing, high risk, high volatility, and zero guarantees. So here's the bottom line. Penny stocks can make you rich, but only if you're disciplined, informed, and lucky. For everyone else, they are more likely to make you broke. In a world where you can build wealth through index investing, dividend stocks, or even EA-driven portfolios, penny stocks are the path for gamblers, not builders. So before you click buy, ask yourself one question. Am I investing in a company or just chasing a story? Because in 2025, stories are cheaper than ever, but good investments are still rare. And the truth about penny stocks is simple. The only guaranteed winners are the people selling the dream. If you found this video valuable, hit that like button, subscribe for more honest breakdowns on investing, and share this with someone who is thinking about diving into penny stocks. Remember, knowledge is your best investment. And the more you understand, the harder it becomes for anyone to sell you the dream that doesn't exist.